If you're a freelancer or a small business owner in South Africa, then tax season can feel a little bit overwhelming. But don't you worry, because in this video, I have got you covered and I'm going to share some essential tips that you should know in order to be compliant with SARS and keep much of your hard-earned money in your pocket, so stay tuned. Hey, what's up you guys? It's Zinhle and welcome back to The Real ZB. So this is week 3 of our tax planning series. We are looking forward to tax year 2026 and we're trying to get all our ducks in a row. So if this is something that you're interested in, make sure that you are subscribed to this channel. Now, in this week's video, we are going to be specifically talking to those of us who are freelancers, or those who have side hustles, or those who are small business owners. So the first thing that I actually want to speak about on this topic is the topic of being a provisional tax payer, because a lot of the people that are in this group are probably supposed to be provisional tax payers. So a provisional taxpayer is anybody who is self-employed or runs a side hustle or earns any other income other than their salary. Examples of other income could be content creation, consulting, or even the rental of properties. So if you fall into this group, it basically means that you pay your taxes in advance, or you are supposed to pay your taxes in advance, instead of waiting for the tax season. So how does this work practically, right? So you're going to make 2 payments per year. Sometimes you'll make 3 if maybe you are at a shortfall, but most of the time you'll make 2 payments a year. So you'll make a payment by the 31st of August, and you'll make your second payment by the 28th or 29th of February. Now, it's important to keep those dates in mind so that you will not be subject to any penalties and fines. So a pro tip here would be to set aside a portion of each and every income or each and every invoice that you get paid in order for you to stay on top of this amount, because it can really add up. And in August, when you have to pay, how much money you need to cough up at one period in time. So it's better to track how much income is coming in and try to set aside at least 30% of that income. It's better to overestimate than underestimate, and that is why I'm saying 30%. And then equally as important as keeping your incomes recorded and in checked and organized, make sure that you're also keeping all of your receipts. All of your expenses that you are subject to in your side hustle or in your business, make sure you keep all of those receipts, because those are the things that are going to enable you to pay less tax. Now, you don't need to use any kind of fancy software to keep your expenses and your incomes in check. You can just keep it on an Excel spreadsheet, to be quite honest. Some people keep a book, whatever floats your boat. Just make sure that you are keeping what came in and what went out your business or side hustle. Those were the first 2 steps in the process. Step number 3 is to make sure that you claim all of your deductions. Now, last week we were speaking about deductions just briefly and high level. Remember, these videos are just brief and high level. If you do have more in-depth things that you want to ask, make sure that you book a consultation with me and we will go through all of the things that you can claim as a deduction in your side hustle. But basically, make sure that you are claiming all of the deductions that are available to you. This is where most freelancers fall short, okay? Because they don't claim everything that's available to them. Umdu will buy a phone and they don't know how to claim for the phone, or they don't know if they can claim for the phone. They'll buy equipment for their content creation and they don't know how to claim for it, or they don't know that they can claim for it. People will incur all sorts of expenses for the business, but they don't claim them as deductions and therefore pay more tax than they're supposed to be. So make sure that you are abreast or above all of the deductions that are available to you. Like I said, do your research if you want to do it on your own, or use platforms like TaxTim to help you to help teach you what kind of deductions you can claim. Make use of tax professionals. They are there for a reason. Even if you book one consultation with any tax professional, just to get you started or to make you aware of all of the things that you are able to claim for as someone who runs a side hustle, a business. Like, for example, I had a comment last week. This is some free advice, okay? I had a comment last week about someone who is making use of rental properties. And I had sort of commented back and said, it's very useful, especially if your rental properties are bonded, because you are able to claim that interest expense as a deduction. So that's just one of, the many examples of deductions that are available that your everyday person is probably not going to know. So if you really want to make use, it's really hard, you guys. If you really want to make the most of, your taxes this year, make sure that you make use of tax professionals. Make sure you use platforms such as TaxTim just to get you started, to make you aware, okay? Because knowledge is power. Going forward, you can do it on your own, but it's equally important to get started on the right footing. So let me share with you some examples of expenses that you can claim as a freelancer. You can claim home office expenses. So you can allocate a portion of your home rent, your cleaner that comes to clean your house, a portion of your utilities to the space where you create your content. So for example, if you have a home office or if you have a studio in your home where you do all your content creation stuff, or from where you run your business, you are able to claim a portion of your home expenses as a business expense in relation to that side hustle or that content creation that you are doing. Another thing that you might be able to claim for is your equipment, your cameras, your laptops, your editing software, your epidemic sound licenses, all of the things that go in your Canva Pro. If you pay for these things, you are able to allocate, you are able to claim them back as deductions because they are a valid business expense. Another one is travel costs, and this is only if it's work related or related specifically to your business. So you're not going to claim willy-nilly personal expenses, all right? But you may be able to claim some travel costs if, for example, you had to catch a plane to Joburg to attend, an event, or if you had to drive somewhere to attend an event, or if you had to incur any kind of travel costs for you to be in the position or in the place where you would be creating your content. So it's not all your travel expenses, but it's expenses that have to do with that side hustle or that business specifically. Another one that many people don't think about is marketing and advertising. So for example, like on TikTok, Facebook, and Instagram, you are able to push your video to a wide range of audience by making use of ads. Like, you make your video an ad, and I've done this quite a number of times when I've had campaigns. I would put my video out as an ad so that it can push to as many people as possible. And those platforms, they charge you a fee to make your video an ad. So you are able to claim those expenses as well. So make sure that if you are sponsoring your videos as an ad on these platforms, you are keeping the receipts and you are claiming those as marketing and advertising expenses. Zininzi, man, there's so many website hosting, there's so many expenses. We'd be here all day if I was to go through the exhaustive list of expenses that you could claim in your business, because all of your businesses are different, okay, and they've got many different expenses, obviously. So yeah, there's just a longer list, but I just wanted to make you aware of some that you might forget to actually include as your expenses when you're doing your taxes. The next step is to register for VAT if you need to register for VAT. Now, in South Africa, you are obligated, or you are mandated, it's mandatory for you to register for VAT if your business is turning over R1 million or more a year, okay, in a 12-month period. Then you have to register for that, okay? And I know that there's influencers out there who are earning that much money, and you should actually be a VAT vendor, but get as collab, you know? But those are the people that have to absolutely register for VAT. So if your business is turning over more than R1 million in a year, baby girl, you should have a VAT number, okay? You are able to also voluntarily register for VAT. Now, you may ask yourself, why would you do that to yourself if it's not mandatory for you to? I mean, it looks professional, to be honest. If you're going to put a VAT number on your invoices, it does look professional. And also, you are able to claim input VAT on your purchases. As much as you pay output VAT, you're able to claim back some input VAT on your purchases if you are a VAT vendor. So a lot of people would like to make use of that advantage, hence they register as VAT vendors. And this is especially for those of you who work with like bigger clients. It just looks professional, okay? It just looks professional. Step 5 is to set aside money for tax. We've touched on this earlier in this video, but I am going to emphasize it more and more and more. And Sana, you cannot put a price on being prepared to pay your taxes, or to being prepared for anything in general when it comes to money. When you have built up a savings fund, or when you have built up a sinking fund, and then it's time to pay that bill and you've got that money already, it basically feels like free money, girl maths, but it basically feels like you didn't pay for it because it didn't come out of your immediate paycheck. You know what I mean? Because you are not an employee, you're self-employed, this means that you are not going to get your taxes withheld when you receive your money. Okay? When your clients pay you your money, when the brands pay you the bag, they're paying you 100% of your money. Okay? They're not withholding any in order to pay to SARS. This means that it is then your responsibility to pay SARS at the end of the day. And just to save yourself from the headaches, it's better to just build up a sinking fund or a savings fund of money you've set aside for tax, so that when that bill comes, you are able to just pay from that sinking fund or pay from that savings fund, and not be surprised and shocked about exactly how much money you need to cough out and pay SARS. A good rule of thumb would be to save 20 to 30% of each and every income that you receive, but I like to be conservative, so I would say save 30% if you can. But if you can save anywhere near 28%, 28 to 30% just to be safe. And as you know, my bonus tip is always to make use of a tax professional, because you know what, especially as a business owner or someone who's got both business and is employed elsewhere and who has one bank account to run all of these things, your taxes can get very, very complex very, very easily. You know, especially when there's exemptions involved and there's deductions that you can and cannot claim. and ring fencing, and zininzi izinto that could be applicable to you specifically. So it's always better to make use of a tax professional, especially upfront. And if you've never, ever done your taxes before, to make use of professionals to hold your hand through the system, because Sana, let us acknowledge that these are things that we were supposed to learn in high school. But unfortunately, the way our education system is set up, we didn't get to learn about taxes and adulting in high school. In any of our basic education structures. The only reason why some of us know about these things is because we went and studied tax, accounting, finance, what have you. But majority of South Africans probably have no cooking clue what they are doing when it comes to paying taxes, claiming deductions, and all of that stuff. So it's not a shame that you would need a professional. And sometimes, even when you are a professional, even when you are a chartered accountant, for example, even when you are a tax professional yourself, sometimes you just need a third eye. You need a third and a fourth eye to be objective, because sometimes you can get too close to your own finances that you have sort of developed some blind spots. So that is why you'll find that some accountants, they have accountants. Some financial planners have their own financial planners, because it always just helps to have a second set of eyes looking over what you are doing. And that's about it when it comes to small business owners and freelancers. Obviously, there's intricacies involved, so make sure you book a consultation if you would like me to go through your specific taxes. If you found this video to be helpful, make sure you give it a thumbs up and share it to everyone that you think would benefit from it. And I'll see you next week when we wrap this series up. Thank you so much for watching, guys. Bye.